Good morning, everybody. It's Christian from Serene Education with you for Majors News Update for the 18th of December 2013. Guys, Wednesday, a lot of news out today, primarily for sterling, GDP, US dollar, but we also have the most important one today being the FOMC statement. Very, very important statement this evening, later this evening for GMT, 7 o'clock GMT our time, regarding the FOMC decision. Are we going to see a tapering of their purchasing plan, their bond purchasing plan? Everybody's been speculating, is it going to be today? This is probably potentially the only time before the end of 2013 before we could see a change in stance from the Fed. So very, very important news out later this evening. This morning, before we start any of that, we have sterling, and we have a lot of news out for sterling. Claremont count change figures. You have the MPC asset purchasing facility votes and the MPC official bank rate vote. This is the guys who decide whether to increase or decrease interest rates, and also to assess the bond purchasing plan that the UK government has in play. So a lot of news out for that. And then we have bits and bobs from Euro and Swiss franc, and then the Canadian wholesales month-on-month figures this afternoon, first thing this afternoon. And then later this evening, for anybody trading New Zealand dollar, we have their GDP quarter-on-quarter figures. So important announcement for New Zealand dollar. They're expecting a very, very strong change in the percentage ratio from the previous, which was 0.2%. They're expecting a forecast of roughly around 1.1. So anything higher than 0.2% will be rather good. If it comes even higher than the forecast, expect to see some really good growth for New Zealand dollar across the US dollar. But primarily, that's going to come to null and void unless we actually see the FOMC statement going either way. That's going to be the deciding piece of news today. Yes, we're going to see a bit of knee-jerk reactions for sterling, etc. Any cross pairs against the US dollar. But I think the most important thing to worry about today would be the FOMC statement. A change in policy there from the Fed will have a ripple effect throughout the global economy, and that's the most overriding news feature today that everybody should be well aware of. So if you are looking to trade, I'd rather you guys stand aside for today in particular. If you are on any trades with the US dollar as a cross pair, then I expect you guys just to be very, very vigilant with your stop placements, etc., and just be quite aggressive with them, because we could expect a lot of volatility prior news announcement, and we could expect a lot of volatility after the news announcement. So be warned, be forewarned. Anyway, let's crack on with the four majors this morning, starting with Euro against US dollar on the daily. As I mentioned, we're likely to see prices moving, but still very, very indecisive, primarily because everybody will be well aware of today's news announcement. Very, very important. The past couple weeks has seen the euro rally against the US dollar recently. Our indicator box is still very much positive, especially our monthly, weekly, and daily outlook. So ideally, we want to see the intraday outlook also favoring, and if you're looking for any further highs, to see this momentum over here moving with long-term sentiment. We are seeing a bit of negativity creeping into those smaller time frames, but that's primarily as prices been very bullish the past couple of weeks. We are now testing prior October highs, and that's also a weekly and a monthly fib high. So a lot of resistance above price currently. That will also become more apparent now because we have FOMC statements today. If we have a change in policy today, we could see the euro rally on that. If we have a change, then we could see either or. We either have a bullish breakout for euro against US dollar, or have a bearish engulfing candle, which would then surmise that we should be looking for further contraction, further shorting opportunities, and that would then take us, or make us look back towards the 23.6 level here on our weekly as our first target. Sterling, as I mentioned, a lot of news out this morning. You can see on the daily quite consolidated, especially as we've headed into the monthly high level here. You can see the last couple of weeks very much being resisted by the 38.2 week monthly fib level. We had a breakout of that, however no true sentiment was actually behind that. You can see the Osmo indicator really much told us there was no true sentiment behind that, therefore not getting into that trade, and subsequently not failing to lose any profit over here. So one, still very much consolidative. Prices pulled back to the price support and resistance level breakouts that we saw here in September. The resistance level of September and October, we had the breakout. So price is now consolidative. You could see that in the actual trading ranges. Very, very indecisive candles. We don't trade indecision. As I mentioned, spinning tops and dojis are indecisive candles. Therefore, we cannot make a true judgment of where price is likely to go to, because it's indecisive. The buyers and sellers are not in agreement. Therefore, we have a spinning top or indecisive candle. So we want to see a decision from the market. Will the news this morning, yes, that we'll probably see some sort of movement this morning because of that, but primarily, will FOMC actually be the catalyst? There again, like Euro, we're either going to see a nice break of the monthly fib, which will then allow us to target the August and April highs of 2011, or we're going to see a bearish engulfing candle here. That will then look negative for the time being, especially going into the new year. And then we can look previously to price support and resistance levels here, roughly around 1591 and change, but also back to the institution moving average as our first target if we see sterling taking a nosedive against the US dollar. Next pair, the US dollar Swiss franc. Here over the past week or so, we've also noticed the US dollar Swiss franc consolidating at a weekly fib. We saw a lot of shorting over the past couple of weeks, and you can see the indicator box primarily telling us that the sentiment is still very much negative, and the R squared is complementing that. We're seeing a change in market sentiment, the shorting sentiment near term, but as price has been dropping, we're having to target our monthly and weekly fib levels, and you can quite clearly see that price has been consolidated at the 38.2 weekly fib level. You can see the buying sentiment intraday now as we see consolidation, and you can see the R squared is complementing that. Overall, the sentiment is still looking negative. It's just that we're consolidating in a negative trend. So we're looking for this afternoon back to FOMC, because it's a US dollar cross, to see if there's going to be any change over there, if that's going to give us our catalyst. Whether we see a bearish engulfing candle close lower, that'll be the first time we've seen a break low in the last week, and then you could see our next potential target way down the side here, a good 680 odd pips to that level. So there's more than enough profit to be made if we do get a genuine confirmation candle from the market. The other scenario would be we see some favorable news out this afternoon for FOMC, and we see the US dollar bounce, a nice bullish engulfing correction candle. That will then surmise we could see a broader pullback, and then we could start looking towards our institution moving average, potentially back up to our weekly 50% fib level, which is at 94.020. US dollar Japanese yen, here again, after the break of this wedge formation that we've seen for so many months, particularly the whole of this month, you can see that we had a nice breakout here, and recently price rallied above the monthly fib, found support, and then we saw price kicking on towards our April highs. Now we're at our April highs, which was also a weekly fib high. You can see price has been very consolidative. Okay, we've seen the last couple of weeks spending consolidating, still making higher highs. You can see that there's not one red candle, so even when we had the pullbacks, price is still very much positive. This was just more profit taking as we headed into a valid major support and resistance level high, which is the April highs of this year. Now we're at it, you can see that more people are taking profit, and people will be well aware that today is FOMC, so therefore we could see a market change. So everybody's being patient at the moment now. You can see our long-term sentiment still very much positive. However, a lot of indecision or selling creeping into our shorter time frames. We got to see a break of this weekly fib level higher, or the April 2013 highs here at 103.82, to see any further buying sentiment. The longer price fails to get above this level, we could see price now testing price swing or support level lows, which is 102.32 and change. Get below that, then there's some odds to say that we're going to see further pullbacks, and we could look back towards our institution, but back to the 50% fib monthly retracement level here at 99.79 as our first potential target below those levels, and you can see we're looking in excess of 250 pips. So very important. FOMC today is going to be a gauge of to see what the likely breakout or scenario is going to be for the 2014, the first quarter of 2014. So very, very important to see what the stance is from the Fed, because that will ripple effect throughout the global economy, and there in turn could see a changes in policy stances for Eurozone, for sterling, etc. across the board. So very, very important. Just be vigilant. Rather treat today as a non-farm payroll day. Rather stand aside, wait for a genuine confirmation from the market, look or reassess it tomorrow, and that will then give us some sort of idea what the actual stance is for the foreseeable future. If you are trading any of these particular Serene Education strategy templates, please back it up with some money management rules. Very, very important. It's a great, fantastic template. However, you have to back it up with sound money management, guys. So important. And this goes to anybody trading their own strategy template. Got to have fantastic money management rules. Other than that, I'm going to leave you with it. Lots of news out today, as I mentioned at the start of this video. please be vigilant. Okay guys, I don't want you guys to be trying to trade speculation today. If you are trading with very small accounts, I do not recommend you guys contemplate trading. Okay, rather stand aside and wait for the market to tip her hand, and then we can start trading with true momentum, true directional momentum, and therefore you're going to be a lot profitable and you'll be not risking a hell of a lot, which is the most important thing. I'll leave you with that for today. Hope you have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, trade serenely.